trading profit and loss account, by extension the appropriation aspect, as well as a statement of financial position. So the format is relatively the same, just some new introductions to additional terms. So we're going to use this activity over here. The following is the trial balance of BBC Limited as on the 31st of December 2017. They gave us some transactions. In the footnote, they tell us that from the following information, we're required to prepare the trading and profit and loss account for the year ended the 31st of December 2017 and a statement of financial position as at that date. The trading profit and loss account will start with our sales. Going to the trial balance to pick up the sales figure, which is 97,500. We don't have any returns, therefore this figure will be our net sales. Next, we're going to move on to our less cost of goods sold. And within that section, we'll have our opening inventory. And our opening inventory, according to the trial balance right here, is $41,415. Next, we'll add our purchases to our opening inventory. So add purchases. Purchases figure is $51,380. We add these two figures together, our total should come to $92,795. Then we're going to less our closing inventory from this amount. So less closing inventory. And our closing inventory, which is provided to us in the footnote, is $54,300. Underline that. We'll bring our total over here. So 92,795 minus 54,300 gives us 38,495. By now you should all know what to do with this figure. You will less. So 97,500 minus 38,495 gives us $59,005. This figure is recorded as your gross profit, which is your profit before expenses are being paid for or taken into consideration. We'll move on now to our less expenses section. This will allow the business to identify its true profit after it has taken into account exactly what it has spent its money on. So under less expenses, we're going to begin by putting our wages. Doesn't matter the particular order you begin in. And the wages amount is $11,372. Next, I'm going to do our sundry expenses. So you can put sundry expenses or you can put sundries, doesn't matter. Expenses saying it's more than one, so sundries would have been acceptable also. The amount is $1,076. Next, I'm going to take into consideration our machinery and motor vehicles. So looking through the trial balance, we have the cost for both machinery and motor vehicle, and it also provided to us the depreciation for both of them. We're also seeing where there is another type of expenses for motor. So I'm going to put that there. Before we do the depreciation, motor expenses. While putting your expenses in, it's always good to look between the trial balance and the footnote for important information. If you're unsure on the difference between expense owing and accrual. The difference is that expense owing generally refers to unpaid bill. So this motor expense owing of $445 is an unpaid bill, whereas accruals are accounting adjustments for expenses or revenues that needs to be recognized before cash transactions occur. So we're able to already identify this amount that we should pay. Therefore, it's referred to as an expense. But when the accounting adjustments for particular expenses are not recognized as yet, we refer to those as accruals. Now, so motor expenses is $445, and we have the motor expenses normal amount, which is $8,144. So what we're going to do right here is we're going to add them together. The figure that's in the trial balance, which is $8,144, plus the amount in the footnote, which is $445. This will equate to $8,589. All right. We have machinery repairs. Yes, so repairs to machinery. It costs the company to repair machines, therefore that by itself is an expense. So repairs to machinery, and this amount is $2,308. Alright, so now we can do the depreciation aspect of the expenses. So we know that we have two sets of depreciation to do based on the information that would have been provided: machinery and motor vehicle. We're going to begin with the machinery. Now, we already know that the cost of machinery is $45,000. So we're going to first account for how much what's the cost for it. And then we're going to look at how much the depreciation was provided at for the 31st of December. So the depreciation provision for machinery is $18,000. So we're going to minus the provision for depreciation from the cost of machinery. So 45,000 minus 18,000. If we should look at the footnote, there's additional information that we should use when depreciating these assets. It says that provide for depreciation of all non-current assets at 20% reducing balance method. So after we have minus the 18,000 from the 45,000, we will times it at the rate of 20% using the reducing balance method. That will equate to 5,400. The next asset that needs to be depreciated is motor vehicle. Same procedure. The cost of motor vehicle is 28,000. The depreciation provision is 12,600. We minus that from the cost. And then, because this footnote specifically, well, it didn't specify that we're only supposed to depreciate a specific asset using this method, it will therefore take into account that we will reduce both assets using this method. So, times 20%. So, the final answer for this will be 3,080. Now that we've accounted for the depreciation aspect, there will be a new term that will be introduced to the trading profit and loss account, and it is director's remuneration, which is actually an expense. So director's remuneration, it refers to the compensation that's paid to the directors of a company for their services, and it includes various forms of payment. So it is recorded as an expense in the profit and loss account because it is a business cost. So directors are actually employees who are responsible for running the company, and their salaries are a part of the operational expenses, just like how we would have other salaries or other wages in the expense section. So directors' remuneration. The cost of director's remuneration is $6,200. Now let's just scan through to see if we have any additional expenses to record. We did motor expenses, repairs to machinist, sundry. We did wages, director's remuneration. We did depreciation for machinery and motor vehicle with consideration of the reducing balance method. We added the motor expenses that is also owing. So all these other transactions would be used in our balance sheet with the exception of one other figure, and you'll see where I put it. So we're going to add up all these expenses right here, and the total should equate or amount to $38,025. What do we do with this figure? As it implies, we're lessing it from our gross profit. So $59,005 minus $38,025 will give us a net profit of $20,980. So this is our net profit. This is the business true profit after paying off all its expenses and take into consideration inventory you'd have brought over from before. Now, this is the part of the trade and profit and loss account where we'll do the appropriation part by extension for this company account. You don't have to separate it, you could just continue. Just like when you're doing a regular appropriation account for company accounts, after you would have included the net profit, you would have gone ahead and started with your retained profits being brought from the previous year, if any. Now, on some occasions, when they ask you to do an appropriation account by itself, they don't always give you a retained profit from the previous year, but some questions do provide that. For example, if you should scan through this question, you will see where they actually provided this to us. Profit and loss accounts as at 31st of December 2016. How can you come to the conclusion that this is your retained profit? Well, we're creating this profit and loss account for 31st of December 2017, which is 1 year after 2016. Then if this is the profit and loss account figure, this must be the net profit, right? And it's a 2016. So this must be the profit that we are bringing over, or the profit that was retained from the year prior. So we're going to put add retained profit brought forward from last year, $6,138. We're going to add that to the net profit, and we would arrive at $27,118. Now we're going to take into consideration our appropriations. Less appropriations. We're going to start off with our dividends. Now, you could separate your dividends, but we could just put proposed dividend. If ordinary dividend was proposed of 20,000, so ordinary dividend is proposed of 20%. Now, 20% of what exactly? The share capital issued, which is 75,000. So for ordinary dividend proposed, we're going to find 20% of the total share capital that would have been authorized to be issued. So 75,000 times the 20% according to the instruction in the footnote. So you could have proposed dividend, or you could have ordinary shares, dividends paid, if you want to be more specific. So 20% of the 75,000 will give us 15,000. And of course, we'll include any reserves. Looking through the footnotes, it says that we're supposed to transfer 2,000 to general reserve. Looking through the trial balance, I'm also seeing a general reserve of 8,000. Now, what would we do right here? I know some of you are wondering, do we add these two general reserves figure together and put them under the appropriations, or do we put the 8,000 only, or do we put the 2,000 only? The truth is, we're only going to record the transfer general reserve under this appropriation. So in the appropriation account, you record only the 2,000 transfer because this represents the current year's allocation. Now, in the balance sheet, you will record the general reserve under the equities and shares section, and that will show the total general reserve, which will be 10,000, which is the 8,000 plus 2,000. So in the appropriation, you only record the 2,000 transfer because we're dealing with the current year's allocation and not the total general reserve. So we're going to put general reserve 2,000. We add the 15,000 with the 2,000, we arrive at 17,000. We're lessing these appropriations, so it is the 27,118, or the, yes, and then we are going to arrive at 10,118. If anybody is wondering why it is that we didn't less any tax, the footnote would have stated to us that we would have ignored taxation, or we're supposed to ignore taxation. Therefore, there wasn't any corporate tax for us to take away. So we would have just omitted that section. So this 10,118 will now be recorded as the retained profits carried forward to next year. And you will double line this figure. And this is your profit and loss trading with extension the appropriation account for company accounts. So now we can move on to doing the statement of financial position. Let's do this. So by scanning through these figures, we know that there are some depreciations that are to be taken into consideration already. So I can just go in and put the headings that I will need. So in the cost, depreciation, and net. Net or net book value, same thing. Our non-current assets, we have machinery. The cost of machinery, 45,000, and the total or the accumulated depreciation. Now, to get the accumulated depreciation would have, of course, take into consideration the amount that we'd have depreciated by. Now, going back to our profit and loss account, for our machinery, for our machinery, we already know that the depreciation provision for it is 18,000, so that's a part of the accumulated depreciation. The other figure will come from the final depreciated figure amount, which is 5,400. So it will be the provision for depreciation that they gave to us, which is 18,000 plus the depreciation value that would have worked out, which is 5,400. This will equal to 23,400. Next non-current asset, motor vehicle. Same procedure. We know that the cost of this motor vehicle is 28,000 based on the information that would have gotten in the trial balance. And we're going to find the accumulated depreciation. So the depreciation it was provided by was 12,600, and we're going to add the depreciation would have found, which is 3,080, and this will equal to 15,680. To find the accumulated depreciation, you plus the depreciation provision that they would have given to you in the trial balance, plus the final figure that you'd have received after depreciating it, after taking into consideration all the instructions such as the reducing balance method. Now, to get the net book value, you subtract the cost from the depreciation. So 45,000 minus 23,400 gives you 21,600. This 15 should be down here. $20,000 minus 15,680 gives us 12,320. We can total these. 73,000, 23,400 plus 15,680 gives us $39,080. We're going to double line these figures because we won't be using these two figures anymore. However, we'll be using the figure, our net book value, for the remaining of this balance sheet. So 21,600 plus 12,320 gives us $33,920. We don't double line this, as I said, because we're going to use this total non-current asset figure. We're going to move on to the next section of the balance sheet, which is our current assets. And under our current assets, of course, we'll include our inventory, and that is our closing inventory. And that amount is 54,300. Then we'll take into consideration our accounts receivable. And that amount is 28,560. So if you still put it like this, with accounts receivable and accounts, of course, the debits or the debtor figure will be your accounts receivable, debtors. Then I'm going to add bank, not seeing any cash. So bank, which is 16,255. Add these figures together, you should amount to $99,115. So the only part of this balance sheet that will have a little difference to it is the finance by section. Everything else will be the same format as before. All right, so now we're going to go to our current liabilities. Accounts payable, 22,472. Then we're going to have our expenses owing, or you can refer to this as your accruals. Our expenses owing, 445. So we'd have accounted for it in our trading profit and loss account, right? But now we're able to identify what exactly this is for, so we can record it officially within our balance sheet. So the expenses owing our accruals is 445. And we'll include proposed dividends. So our proposed dividend is 15,000. We already found the 20% of the total share capital for ordinary shares. So we're just going to put the 15,000 here. Remember, dividends are payouts from the company to the shareholders. So this is money that the company is required to pay. It's a liability. Now we can arrive at the total for these three figures, which is $37,917. And of course, you're going to less your current liabilities from your current assets. So 99,115 minus 37,917, and you will arrive at $61,198. And this figure is also recorded as or identified as your net current assets. So our non-current assets minus our net current assets, sorry, so our non-current assets figure plus our net current assets figure will give us a working capital of $95,118. So this is the capital that business is using for its everyday transactions. Now we're going to go to the finance by section. So you could either record it as a finance by section, or you could refer to it as your equity and shares section. So whichever would be fine for this part. Under this section, you will have your capital and reserves. Now, under your capital and reserves, you will have your called up share capital. And this amount is provided to us in the trial balance as 75,000. Now, your called up capital is the total amount of shares that you plan on issuing to potential shareholders, and as such, you expect to get some money in return, either at the stipulated agreed time or before. And this money that you'd have received from the potential shareholders will go towards your business capital. So it's referred as called up capital. Then we'll have our reserve section. Remember earlier I was telling you that in your trading profit and loss account, you only put the remember earlier I was telling you about that you only put the transfer to the general reserve in the trading profit and loss account, because that is the current year's, that's a new allocation from the current year's profit. But I was saying that in the equity and shares section of the balance sheet, that's where you put the total reserve. So for general reserve, you will include the amounts that's given to us in the trial balance, which is 8,000. Then you'll add the transfer to it, which is 2,000. So 8,000 plus 2,000 will equate to 10,000 for our general reserve. We will also take into consideration the profit and loss account. So when they just have the profit and loss account like this, they're referring to the net profit that you would have arrived at by doing your trading and profit and loss account. But not just the net profit, but so now we're going to have our profit and loss account. When they have the profit and loss account like this, they're referring to the final figure you'd have arrived at from your profit and loss account, and that would have been the retained profits that you would carry to next year. And that amount is 10,000 based on our trading profit and loss account, 10,118. So do not mistakenly put your net profit figure in place of the retained profits brought to next year at this section, because that will throw it entirely off. You add the general reserve total plus the profit and loss account, and you'll arrive at 20,118. You add your general reserves plus your profit and loss account, and you should arrive at 95,118. And this is telling us that our account was balanced because these figures match. And that is how you do a trading profit and loss account, by extension the appropriation aspect, as well as a statement of financial position for company accounts. I hope you enjoyed and learned something from this video.